Sanjeev Hasin is also joining us this morning to talk more about markets. Sanjeev, Merry Christmas to you. I heard that Delhi highways going out into all these hill stations are badly jammed. Delhi was having a great time Christmas. In fact, Mr. Modi also hosted a massive Christmas party. How was the Delhi scene as far as Christmas is concerned?
Yeah, good morning, Ajay. Merry Christmas to you, your viewers, your whole team. And who could have asked for a better and a brighter Christmas? You've had Nifty celebrate Christmas, New Year, everything in advance. So yes, the atmosphere is very good. In Delhi, you've had a slew of weddings. I mean, I've attended 4 weddings in the last 3 days, and the festive cheer is really there. So, like you rightly pointed out, I used to keep telling people that pan India, the rotation of traffic is so high that people want to go get away from cities into smaller places, hill stations. That's why your IRB Infra will be laughing his way because he has 24,000 kilometers of roads, and you've seen NHAI and FASTag become a compulsory, compulsion. So yes, it's a very, very bonhomie time. Hotels, transport, entertainment are having their best time, and nobody is complaining because the stock market is also at an all-time high. And the global cheer is there. You never expected that the Fed will pivot so fast. Now there are talks of 3 rate cuts. So enjoy the bonhomie as it goes. We head into a new year on a very, very optimistic note, Ajay.
Okay, and hope Santa is going to give you a super gift, Sanjeev, this festive season. So why don't you play Santa Claus for our viewers and for our investors out there and recommend some amazing gifts?
Well, Avan, we are always recommending something or the other for you to make money. The idea is stay invested. I'll just give you a small anecdote. People talk of trading, buying and selling. For the common investor, the best way is go through a SIP, do a mutual fund, do a PMS, do a, whichever category, but please stay invested. There will be a rotation of stocks. The problem is when you do a trading pick and you do get that 20-30% pop, you try to sell out and sit out cash, you do not rotate. And then when the markets go higher, you get into XYZ. So the feeling of missed out is because of that. And particularly on the FI side, who withdrew money on the back of higher bond yield and so on. So my humble suggestion is stay invested. The volatility will be there. You are at new highs, and you saw that last week also play out. So my top 2 picks, which I will give you for this week and for the 2024, first would be, or rather 3 picks. First would be Ashok Leyland. See, I'm very bullish on Ashok Leyland, given that it is eating into market share on the CV side from Tata Motors. It is the 3rd largest bus maker in the world, 53% market share. And as you see Indigo and GMR prosper, all the blue buses are Ashok Leyland. Thirdly, their internal combustion, communication source of IC, those is doing extremely well. They are also in the EV space quite rapidly. Ashok Leyland at 170 has a very good risk reward for a target of 230 to 250. Second would be go with the largest bank, that is ICICI Bank. Unquestionably, it has all the verticals within it. The NIMs are the highest. The liability side is doing extremely well. And I would say that ICICI from here is poised to be a large cap which will dominate, which has underperformed maybe in the last 6 months, but which can outperform. 1250 is my target on ICICI. And last but not least, a small bank called DCB Bank. DCB is promoted by the Aga Khan Foundation. It trades at 0.9 time price to book at a time when PSU banks are now trading at 2.5 times. DCB also is the largest player in two-wheeler, in agri and in gold loans. The promoters have just issued a preferential allotment at 137 at a premium, the highest rate which is there of about 80 crore. And they are infusing capital. I think DCB is a no-brainer here, given that the way it is transcending and it's now, expanded its branches for which the cost overrun was there. I think NIMs and net interest margins and net interest income will be very sharp. DCB Bank, according to me, is a star for 2024. I wouldn't be surprised if 200 and beyond come on this stock.
Sanjeev, the other thing which has happened over the weekend is that first auto company, first EV company has finally filed RHP. I'd like your opinion on it as well, but Shrishti is here with the details of the RHP, and then we'll come to you. How do you analyze it, the impact it will have on the auto space as well? Shrishti, tell us.
Well, yes, Ola Electric IPO is finally through. The company has gone ahead and filed the DRHP with SEBI, wherein this IPO is going to be a mix of an OFS as well as a fresh issue. Do remember that this is going to be the first IPO from an auto major to come out in the last 20 years. And this is the first IPO being the pure play EV company to hit the markets. Talking about this IPO, it's going to be a 5,500 crores of fresh issue. Other than that, the promoters and investors are also looking to offload some of their stake, and this could be as much as 9.5 crore shares. When promoter Bhavesh Agrawal will be looking to offload 4.7 crore shares, and SPF2 Ostrich is looking to offload 2.4 crore shares. Now, about the fresh issue of 5,500 crores, where the company will utilize their money. So, as we know that the company has a self-manufacturing plant that is upcoming, they're going to be utilizing 1,226 crores out of the 5,500 crores for the expansion of this plant. Another 800 crores is what they plan to utilize for the repayment of debt of some of their subsidiaries. 1,600 crores is what the company intends to invest into R&D, and 350 crores they will be setting aside for the organic growth initiatives. Now, talking about the financials, as we know that Ola Electric is one of the leaders in the two-wheeler EV segment, but when it comes to the top line, indeed there is a growth, but the bottom line is under pressure as the company reported 1,472 crores of loss in FY23, and this number is 267 crores in Q1 FY24. But the gross margin has seen an improvement from negative 5.4% in FY22. This number has seen an improvement to 13.73%. Other than that, if we compare with rest of the peers, since the bottom line is in the red, so the EPS is actually negative. But all eyes on Ola Electric. These are the details of the DRHP filed at SEBI.
Srishti, Sanjeev, how do you analyze this IPO? Do you think it is meant for retail, or it's the institutional money, much more longer term kind of money, especially in light of some of the consumer tech companies? They also position themselves as a consumer tech companies only.
Yeah, so Ajay, see, firstly, like Srishti pointed out, it's the first IPO by an auto company after 20 years. I think from where I recollect, Maruti was there in 2003, and now you've had this, Ola Electric. Plus, they've not brought out their ICE vehicle; they're bringing out the electric, which has a huge potential. Thirdly, there is a two-horse race, Ola and Uber, and both have promoters in the shape of private equity SoftBank, which will be some sort of dilution for them. We have to look at the next 5 years, Ajay, because I think EVs are inevitable. And I was just doing a case study and meeting someone. They told me that by 2025, actually EVs may come down to the price of an ICE vehicle, which is where you will see this sudden run for getting EVs. We are in the process of setting up charging stations, the infrastructure, but I think this is a very good long-term play. And given coming from a house which is now more of an international play, I would definitely recommend this with a 2-3 year window to create wealth.
Okay, so that's the verdict on IPO of Ola, which is on the anvil now. Very soon we'll be seeing that. Of course, we'll have to wait by to see what the valuations, etc. are. But thematically speaking, it is likely to generate wealth over the next 2 to 3 years. That's the view coming in from Mr. Sanjeev Bhasin. But Mr. Bhasin, what about J. Kumar Infrastructure? Do you track this one closely? CLSA has written a note today and they've almost doubled the target price to above 700 rupees.
Well, you are aware that the best is now coming in, and now there will be recommendations across the board where there are vested interests and so on. We have been bullish on this space in the shape of NBCC and NCC. I don't track J. Kumar Infra, but I know that they are very much into infrastructure development. This stock was one of our recommendations, close to 150. Now at 500 to say it will jump, that is actually bull market talk. We are invested in NBCC and NCC, which have a far greater vision, far better order and execution book. So as a disclosure, those two are in our portfolios. J. Kumar could be a relative outperformer given that government's recoveries and processes of payments have become faster. And in infrastructure, what the problem is getting your dues from the government. I think that is what is seeing a lot of target, and that could be the reason they have recommended it. But Anisha, take it with a pinch of salt. At 21,500, you will only get ideas which are going to double. So you have to be cautious.
Okay, so of course, a lot of those infrastructure names are doing well, and NCC, etc., is something which is on the radar. Mr. Vaseem, do you track this one, Anantraj?
Well, this was one of my steals, if I can say, at 18 and a half, 19, when the promoter was buying in the deepest throes of COVID. I picked up this share, and I thought that the market value to discount to the land value in Gurgaon was at the highest ever. So as a disclosure, it's in my portfolio from 18 rupees. And I can tell you one thing, yesterday I met some property broker also who was telling me about DLF's new launches. This is just to be a little bit cautious. DLF in sector 77 near golf course is launching a new project at 18,000 a square foot. So, real estate players are now going through the roof in pricing also. There is a lot of demand, and the double twin effect of wealth, that is high gold prices, stock prices, all are leading to, a peak coming there. So be cautious on some of these real estate names. They've already doubled, tripled, more of 10 times. I will be very, very happy if it does well. But this is a bit of caution, because if you're going to price it beyond normal, then, if in the next 3 months you see any uneasiness on growth, then there will be definitely a ripple effect both on rates and on property prices. So a bit of caution over here on real estate and construction.
Okay, really lucked out on that one, and a great call. That's Anantraj and the entire real estate basket that has been a buzz of late.
Yes, profitability has been something that all of these new age tech companies have been talking about very, very positively now. But Mr. Vaseem, before I let you go, despite the run-up that we have seen in some of these new age tech companies, which are the ones that still look good to you? Would you take a bet, let's say, on an underperformer like Nykaa, or stay with the strong name like Zomato?
So Anisha, firstly on Paytm, I think it's a very big positive. They've realized that shareholder value and the bottom line is going to be key. And we've seen that the stock got a hammering from 800 level back to the 600 on the back. That's small ticket, and the co-lending business will be under pressure, and they've guided for 2 quarters. But I think this is a very big positive that the management is cutting off the excessive slab. It is improving return on equity. And thirdly, there is no better technology play on QR and this whole fintech than Paytm. As a disclosure, we have started to add Paytm in our portfolio. We already had it. We think Paytm is a no-brainer. They are also getting the contract for DMRC for Delhi Metro. It will be the next place which they are going to grow on volumes. And as they transcend from the small ticket size to the large ticket size, this is going to be a business which is going to be unscalable, which is going to be the maximum of scalability. Thirdly, their cost cutting means they are now behaving like a listed player rather than a private equity where you could add that slab with no disclosure. So thumbs up to the management. They are unleashing a lot of things which are going to be a shareholder wealth improvement and so on. So Paytm, Zomato, and PB Fintech, these continue to be my 3 top favorites. In fact, I can say that if PB Fintech, that is Paisabazaar and Paytm, are no-brainers at this price.
All right, Sanjeev, thank you very much for your time this morning.